Hello again and welcome to this weekend market analysis for the 25th to the 29th of September 2017. Well, the Forex market has been really mixed with a lot of global economic issues. In fact, recently we are expecting the price reaction from German federal elections, all of those North Korea missile test issues, Brexit procedures, and of course this week we are going to see plenty of speeches from the central bank's president. Okay, all right, once all of these global economic issues are addressed, the market is definitely going to find a headway. We are hopeful that this September should wrap up with all of that. Then we are certainly going to start seeing a very profitable price action to trade. Okay, without wasting much of your time, let's quickly move into the Forex factory economic calendar to see those high impact news announcements that are scheduled for this upcoming trading week. All right, you are now looking into the Forex factory economic calendar from September 25th being Monday to September 29th being Friday. Actually, this seems to be the last very last trading week in the month of September. So as you can see here, we have plenty of species. As you can see, on Monday we have one coming from Japanese yen axis. Draghi will be speaking from the euro axis as well. Okay, Fed Chair Yellen will be speaking from the American axis on Tuesday the 26th. We also have another speech from the Canadian dollar axis. Governor Paulos will be speaking on Wednesday. Okay, we also have on Thursday another speech right here from the Japanese yen axis, the sterling pounds axis as well. These are central banks governors speeches, and they tend to hold the market to a standstill, cause abnormal price volatility, and we might be seeing that much within this week. Okay, the next one, Draghi again will be speaking on Friday from the euro axis, and Kani will be speaking from the sterling pounds axis. So all of these speeches are things that can influence the market in this upcoming trading week. I think this is a period of time that we really need real-time patience, real-time discipline, just to be sure that we are safe in the market. Okay, you want all of these events to be over so the market can have a clear directional bias without any distraction. We need more stability in price action. Okay, all right, if you are a long-term trader, you want to also pay attention to our interest rate announcement from the New Zealand axis. All right, this is interest rate for New Zealand dollar on Wednesday the 27th of September. So you want to be careful trading the interest rate crosses, the New Zealand dollar crosses within this news release hour on Wednesday the 27th of September. So it's going to be a more busy economic trading week for this upcoming trading week. You would really want to be very conservative with the market, as all of these news events will be happening, and of course the Forex market will be affected. Okay, all right, let's proceed into the charts and look into those pairs that are hitting their optimal levels of support and resistance, those peak points where traders will be looking to take their trades and cash out profits very quickly. Okay, so we'll be hitting the nail straight on the head without wasting much time doing this weekend market analysis. All right, let's get going. Okay, first and as usual, the euro against the American dollar. This is the weekly time frame. Let's look into this pair, although there is nothing really interesting so far, but as a thing of major concern, we do analyze the euro against the American dollar every single week. Okay, all right, so in the weekly time frame, you can see how choppy price behavior has been for the past few weeks. All right, how many weeks? 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. Price has remained within this area. It is quite difficult for price to take to one direction. Okay, well, that price action can clearly be visualized in the daily time frame, where you can see more of a triangle formation. Let me take out these lines. These are things that we have done already in the live trading room. Price is in that triangle formation. Okay, triangle formation. Well, as it is right now, anything is possible. Price can move to whatever direction it wants to move. I was actually bullish with this pair, but right now with the much hesitation, price can take to any direction. Okay, we are following the 3 SMA setup in the daily time frame, looking to trade the breakout setup on this triangle formation. If price is able to break to the upside, giving us a breakout pullback, a continuation pattern in the trigger chart, which is of course the 4 hours time frame. The daily time frame is the setup chart, the trigger chart is the 4 hours time frame. So if we can have the breakout pullback, a continuation pattern in the trigger chart, the 4 hours time frame, we'll be happy to go long with the euro against the American dollar. Right now, price is still within that triangle formation, within that congestion area. Price is compressing. We cannot take any trade within this area of a no man's land. Okay, it is a no man's land. Yeah, you can't trade profitably within that area of compression. At best, you want price to break out of that compression, either to the upside or to the downside. So let's wait and see what's going to happen. Surely price is going to break out of that area. Okay, all right, that is it. No need going to the intraday time frame, because it is totally a mess whenever you see this type of market condition in the daily or even the weekly time frame. The intraday time frame might have nothing to offer at all. Okay, all right, let's move into the next pair. Okay, you are looking into the American dollar against the Canadian dollar, the weekly time frame as well. As you can see, price has been in a very wide range. Okay, it is a channel in the bigger picture, that is the monthly time frame. You can see how price has been swinging up and down, and the next directional bias is to the downside. Let's actually see that in the monthly time frame. Right, this is the monthly time frame, and that is the channel that we were talking about. Price has been respecting the lower leg of that channel as support, and has been respecting the upper leg with that confirmation as resistance. So the next directional bias is obviously to the downside. In the American dollar against the Canadian dollar, we are obviously bearish with this pair. Let's see the weekly time frame. All right, in the weekly time frame, price is heading to retest a level that once acted as a support there. In fact, a double bottom right there, support as well. This level is a key level that should also act as resistance the next time price comes to retest that area. Okay, so this is an optimal area to look for short opportunities right there. Once price hits that level, you want to look for those fingerprints that should give you the next hint, the next directional bias, obviously to the downside. So we have the American dollar against the Canadian dollar on our radar, looking to go short with this pair once we find the valid price action that will give us that signal. We are following this pair in the daily time frame, and this is where we are looking for that reversal pattern. If price is able to push to the upside around that area, that is where we'll be looking for reversals to the downside. Well, if you don't want to follow the reversals pattern, then you want to follow the 3 SMA trading strategy here in the daily time frame, where price is obviously heading to retest a former broken level of support. Okay, in fact, we had a flat bottom triangle. We had analyzed this several times, and price is making the first swing pullback. This is the first swing pullback to that broken point. All right, this is a heavy level of resistance and a high quality trade that is about to happen here. So in the daily time frame, we'll be looking for the first bearish candle, in this case the first red candle close off that breakout point, and that should be happening any moment soon. Once that first red candle closes, we'll be clicking on our sell button and looking for price to push further to the downside. This is a high probability trade where the risk reward ratio is going to be fantastic. Okay, so keep this is something that we are following. All right, that is it. There is no need looking into the intraday time frame. The setup itself is here, and we have our bullets at that point waiting to take this trade. All right, let's move on to the next pair. And now the Swiss franc against the Japanese yen, and we are looking into the weekly time frame. As you can see here, upon this heavy push to the downside, price has been on a retracement channel. Okay, that's the retracement channel. Price has been swinging within this channel formation. The next directional bias is supposed to be to the downside, but we are seeing plenty of hesitation within this junction of the chart. Okay, actually this is the key level of support here, this area. That's the key level of support, and price has made that push to a critical zone. If you take your Fibonacci retracement tool, let's zoom in this chart better. If you take your Fibonacci retracement tool from the high there, although we are not trending right now, okay, but this is a level where we have a pin bar forming around the Fibonacci retracement area. So that is an optimal area for price to move back down. Okay, it's an optimal area to look for short opportunities in the Swiss franc against the Japanese yen. Price should not push to the upside. You shouldn't be looking for long opportunities here. You don't want to go long with that. Price is likely for this week going to push to the downside. Okay, for those of you who like the popular shoulder head shoulder pattern formation, you might also want to draw this as the first shoulder, this as the head, and the second shoulder conformation there, while this here is the neckline. Okay, it's the neckline. Price is giving an early entry around the second shoulder for us to push down, breaking that neckline, a pullback and a continuation move. Okay, that is what you are seeing there. So like I said, this is an optimal area that the price should be coming to the downside. Okay, all right, nothing to talk about here, nothing much. Let's just follow this in the weekly time frame. We will be searching for only short opportunities in the Swiss franc against the Japanese yen. Unfortunately, we don't have the valid setup within our trading strategies to take this entry. If you are brave enough and you are an aggressive trader, why not? You can go short, place your stop loss a few pips above that level, hoping that price will push to the downside. But we won't do that. It is not part of our core trading strategies, so we'll not be calling for any signals at that particular level. All right, let's move on again to the next pair. We are now looking into the American dollar against the Swiss franc in the daily time frame. I am sure you are already seeing what I am seeing here. We have already analyzed this pair in the live trading room, and I am sure you can see the channel formation that we have there. Okay, so this is also an optimal area for price to begin to push to the downside, although the hint is not really clear yet. Okay, so it is even better to wait for price to push to somewhere around in here. Okay, maybe somewhere there, but I know that there will be lots of hesitation around this area. Okay, price might make some little pushes again somewhere there, hesitate a lot before pushing to the downside. This is a channel formation, and it doesn't fall in line with any of our core trading strategies, and so we are not taking any trade here. But you really want to avoid going long against that level of resistance. Okay, you want to avoid going long against that level of resistance. The best advice, if you are an aggressive trader, is to keep looking for short opportunities around this area in the American dollar against the Swiss franc. Okay, all right, very quickly again to the next pair. The New Zealand dollar against the Canadian dollar. This is my favorite pair, and I am starting this from the monthly time frame. Okay, it is my favorite pair, and I'm looking to go short with this pair. We are actually following this pair very closely. This might be some of our bread and butter before the month of September comes to an end. In the monthly time frame, we are looking at the possibility of a channel formation as well. All right, where the next directional bias remains to the downside. Possibly to retest the lower channel leg, as you can see right here. Okay, all right, very clearly in the monthly time frame, you can see how that area acted as support. All right, support right there. It was broken massively with that momentum candle, and right now price seems to be pulling back to that very zone, and that is an optimal area to look for short entries in this pair. Now, in the weekly time frame, where we have a better price action, you can see how price is already pulling back to retest that key zone that was holding price as support. So upon this pullback, we are going to be waiting in the weekly time frame to see that bounce candle. From there on, that is where we are going to be clicking on our sell button to drive to ride this move back down. Okay, we are actually getting most of the best price actions this week, and we hope we are going to see better profits in this upcoming trading week. Like I said, this is my favorite pair for this week. I am even more interested in this, but then with the weekend events on the New Zealand dollar, we might be seeing some little market volatility here. I would like to see a gap to the upside close to that level of resistance before price comes down. If price gapped to the downside, well, I am afraid this setup might be violated. Okay, anyway, let's keep it. It is still a valid setup to follow in the daily time frame. Nothing really. Price might make a hard pullback to that zone before coming to the downside. Okay, all right, so we are following the weekly time frame in on the New Zealand dollar against the Canadian dollar. Let's wait for the pullback to that heavy level of resistance and look for our short entry. It's a nice setup, a nice pattern, a very good price action that should end up being profitable. All right, quickly to the next pair. Okay, the Canadian dollar against the Swiss franc. This is the weekly time frame. Price has been in a heavy range. This is a very heavy range for the past several weeks, and that is why the forex market for the entire year has not been easy trading. Okay, right now price is sitting at an optimal area where traders should be searching for short opportunities. As you can see, this is a heavy level of resistance right here. Okay, it's a key level of resistance, and price has retested that level. We should be seeing price coming down, all right, slowly, although we don't have any valid setup in the weekly time frame. But in the daily time frame, although price is also sitting at a problematic zone, we might see price push down a bit. Okay, so if you are looking to trade this pair, you want to concentrate on trading, looking for short opportunities. If you conduct an in-depth analysis of this pair as well, you will find that we are likely going to have a triangle formation there. Okay, triangle formation. So if you are taking your short entries, you want to cash out your profit before hitting the lower leg of that triangle formation, and that is just the little price action that might happen there. All right, for now, this is what you are likely going to see. Price might push down for the first few days in this upcoming trading week, and from there on push up again within that price compression area. Okay, all right, nothing more than that. That's the only thing that is clear for now. So let's look into the final pair in this review, which is of course the Australian dollar against the Japanese yen in the weekly time frame. As you can see from my screen, price is heading or trading around a key level of resistance, which is also the upper channel leg if we are to have this channel confirmed. Okay, with that pin bar close right there in the weekly time frame, we are having the hint that we will be going to the downside in this upcoming trading week. Well, this is not a high quality setup, so we are actually not taking this trade. If you are brave enough, like I used to say, you might want to go short around that area, but this is quite risky. We are not interested in the setup, okay? But it is an optimal area where you don't want to search for long opportunities. You want to concentrate searching for short opportunities in the Australian dollar against the Japanese yen. Last week Friday, we actually took a trade. Let me zoom into the 1 hour time frame. All right, we actually took a trade around this level, this double level of support right here. That trade didn't perform, didn't do well. Price pushed up, kicking all of those stop losses. Right now it's ready to come back down. What you are seeing here also might fall within the realm of a shoulder head shoulder pattern formation, okay? Most of you call this the first shoulder. This is the head, and this is the second shoulder. All right, and the second shoulder is where aggressive traders will be looking to click on the sell button for an early entry. And of course, this level right here, this one should be the neckline. All right, it should be the neckline. Once that neckline has given way, price should be pushing to the downside in the Australian dollar against the Japanese yen. So if you're an aggressive trader, this is where you might be looking to click on your sell button as the market opens with your stop loss a few pips above. Hopefully you are going to ride it back down to that area, okay, right there, then maybe cash out some profit before the neckline is being broken, okay. Well, I am not doing aggressive trades anymore, but at any rate, these are high quality setups for aggressive traders to get involved. So we'll be waiting for this neckline to be broken. Once this level is broken, that is where we'll be trading using our core trading strategies to go short with the Australian dollar against the Japanese yen, okay. All right, so price is at an optimal area in the long term, and we are hopeful that we will be seeing some bearish pushes from that level right on, okay. All right, this is basically all in this review, and I hope you enjoy it. If you have questions or contributions, as usual, do not hesitate to post them in the Telegram group or in the live chat window in the live trading room. We'll respond to them accordingly. I am hopeful. I'm very optimistic that brighter days are ahead. We have that strong belief that things are definitely going to get better, and at the end we will always come on top. Thanks for watching. We'll be talking to you soon in the live trading room. Cheers and bye-bye.